Welcome to Huddle for Success, real talk, real goals, and real results, where they help you make it happen in your life and business. Your hosts are Mark, Bruce, and Duane Gibbs, and they're here to help you level up your mindset, growth, and your success. Whether you're after personal growth or financial growth, they have you covered. Now let's huddle up.
Welcome to Huddle for Success. I'm your host, Duane Gibbs. Alongside of me, as always, my partner, Mark Bruce, who is the Hall of Famer. Good morning.
Good morning, Duane. Good to see you.
Yes, good to see you. Listen, for those of you that are just joining us, join us each and every Monday as we come and bring you a new episode on our podcast. Also, we do a quick huddle up session every Wednesday and Friday with a quick mindful thought. And we talk about different topics. We have special guests. Today, we have a very special guest, a good friend of mine, John Bowens. He's here with Equity Trust, and he's going to talk about IRAs and investments. Before we get into introducing John, those of you that have listened to our podcast last week, the question was, what do you want to have more of? But it can't be money. And so Mark and I thought it was a great segue into today's guest. John, welcome.
Hey, Duane, thank you so much. Mark as well.
Good to have you, John.
Yeah, we talked that was the big headline last week of what do you want more of, but it can't be money. And you know all about that in regards to a lot of your clients because they have capital and they're looking to do something with what they have. And so why don't you tell everybody a little bit about who you are, what you do, your experience, and again, thanks for being on. We're grateful for that.
Yeah, likewise. And right back at you, Duane and Mark. Thanks for having me on. And it's a great opportunity and platform to be able to talk about money, talk about retirement savings, and do it in a very practical way. And you guys are obviously doing a great job with the book and everything else you're doing for your constituents and clients. So as a brief introduction, I've been with this firm, Equity Trust, for nearly 20 years. I met our company founder, Dick Desich, nearly 20 years ago. And as my mentor, he taught me that you could use a retirement plan, an IRA, a 401k rollover, to invest in real estate, private equity, alternative investments, as we call it. So I'm not solely reliant on a portfolio of only investing in stocks, bonds, and mutual funds. And because I had worked for a real estate company prior to coming to Equity Trust, I saw how real estate can create wealth and leave a legacy. And I know how important legacy is for you guys and community building is for you guys, as it is for me. Growing up in more of a blue collar type household, that was really, really important. And so kind of bringing together those two worlds and my background academically in personal financial planning, it was a perfect fit for me to be able to help individuals, but also help myself be able to use retirement savings accounts to invest in an asset class such as real estate. And so I've owned rental properties in my self-directed accounts. I make loans secured by real estate. I own real estate. I lend money on real estate, cryptocurrency. There's all sorts of ways that you can invest your retirement savings. You're not reliant 100% on the traditional financial markets. And so that's what our clients do. That's what I do. And there's some really interesting tax savings components to this. So for example, with a Roth IRA or a Roth solo 401k plan, you can put money away after tax. You can grow it tax-free by investing in real estate and other alternative assets, including cryptocurrency and even physical gold and silver. And then your distributions are tax-free. And I always like to say, Duane and Mark, you've probably heard me say this before. Duane, definitely out at the different conferences that we've attended together, compounding interest in the absence of taxation. And so if I can compound my wealth and I have more tax savings, what that allows me to do is things like leave more money for my generations to come. I have the ability to be able to improve my local community. So when I do real estate deals, I'm generally doing those real estate deals in my local community. I'm lending money secured by real estate. So I'm putting people to work, title companies, real estate agents, an individual that's rehabbing houses. He's living, essentially flip to flip to flip, right? To feed his family.
That's it.
those are the types of to deals that, we see a lot of our clients do here. And so it definitely makes me feel good in terms of what I do around teaching and educating, but then also being able to, benefit from the tax savings capability of utilizing these self-directed retirement plans, which I know you guys have seen over the years as well in your industry.
Yeah, no question. I was telling Mark before getting you on, I said, listen, we've known each other for a long time and just really felt that it would be a benefit for you to be on, just so our listeners can really get a better understanding of what they can do for the monies that they have, or looking to the future of, hey, I'm starting to invest at my job into a 401k, and maybe I want to go to an IRA, and I left a job where I had money. What's that look like rolling over? And then ones that have kids, grandkids, and talking about Coverdale. I think that's such a huge proponent for people that goes unlooked. I think a lot of people, one, whether they don't know about it, or they just don't really realize that it's available for people to invest in. And so maybe you can talk a little bit about that.
Yeah, absolutely. In terms of retirement savings, I always break it down into there are four tax favored accounts that one can consider or utilize. And there is the Coverdell Education Savings Account, a sort of a separate conversation. And you are right, there's advantages to that. But primarily for a lot of folks, to simplify it, there are four tax favored accounts that they can consider. The first is a traditional IRA. The second is a Roth IRA. The third is a solo 401k plan. So I understand there's a lot of solopreneurs out there, self-employed people. A solo 401k plan can be a really great fit for that individual. And then lastly, an HSA, a health savings account. And a lot of people aren't thinking about an HSA. For example, I use my HSA, my health savings account, when I'm doing private money loans. I will partner my HSA in with my other self-directed accounts to loan money secured by real estate. As a quick example, I made a $193,000 loan about 15 months ago to a fix and flip investor, paid 14% interest. The deal was a 13-month deal. I made 14.77% of my money. My HSA had 4% in the private money loan. My Roth had 80%, and my traditional had 16%. I made about $28,500 in interest income, which was totally tax-free because it was in my self-directed accounts. I ended up saving over $6,800 in taxes on that one transaction. So that's awesome. Compounding interest in the absence of taxation that I was talking about. My HSA received just over $1,000 of that interest income, which was totally tax-free. The beauty of it is, in HSA, you get triple the tax benefits. I got a deduction going in, I got tax-free growth, and then when I take it out and I use it for medical expenses, I pay 0% tax. And guess what? I can do what I call medical bill stacking. So I can save my medical receipts, and then later on, let's say 10 years from now, I can go back in time and reimburse myself. So back to the tax favored accounts, traditional IRA, Roth IRA, solo 401k, and HSA. And for those out there that have IRAs and 401ks and other retirement plans, in many cases, they can unlock those dollars and roll over or transfer without any taxes or penalties into what we call a self-directed IRA or self-directed solo 401k or self-directed HSA. Unfortunately, most Americans, they put their money with a financial institution and they never touch that money. And when I say never touch the money, I mean they never move it to another financial institution their entire life.
Why is that?
Firms love it, right? They love it because you never move your money, because people think that they're not allowed to move their money. They think that they're stuck with whatever financial institution they are, and that's not the case. You have the freedom to be able to use your money the way that you see your money being invested and as a good fit for you.
Awesome. That's so good. Mark?
I was in my mid-50s before I met Duane in the note business, and then I met you through the note business. And it's like, I thought there was just, normal IRAs. I did not know that there were self-directed IRAs. And I thought I was a pretty educated person when it came to retirement things. I love the self-directed Roth, the self-directed traditional. I've seen some case studies that you put out there. Some of your case studies are getting some pretty phenomenal results that you just could not get in the stock market. Can you think of one off the top of your head maybe that could
Oh yeah, absolutely. Property investment. We spend a lot of time, and Mark, we met each other in the real estate space and still heavily in the real estate space. And a client of mine in the Cleveland, Ohio area, where my hometown is, he bought a property in 2020 for 63,000 from an aging landlord. So it was a property that was in need of some deferred maintenance taken care of and some tenant issues. And the long story short is he bought it for 63,000, and he utilized his self-directed accounts to buy this property. And he put about $15,000 worth of work into it over about 2 years. He got it tenanted, got a good stable base on the property, and sold the property for about 115,000. So his annualized cash on cash return between the rental income and the capital gains on the sale was about 32%. Now he paid no capital gains tax. Right. He paid no taxes at all because he owned it in his self-directed accounts. So if you have the ability to be able to do this, what happens is your return on investment, your annualized return on investment, cash on cash, it increases. Why? Because you're not paying taxes. And so in that case, it was a 32% annualized return. We have a lot of clients that are in the private money lending business or the note business. Duane, we met each other back in the note business. And so we have a lot of clients that are participating in those types of asset classes as well. And as an example, I mentioned one before, 14.77% return on a private money loan. Another deal, an $80,000 loan with a Roth account, making 16% return. And that was over the course of about 12 months. So that was a fix and flip transaction. Now, just like anything else, right? The big disclaimer is there's no guarantees. And there's risk, of course, right? When you're lending money on real estate assets, that's the collateral that you have, assuming that you do have real estate as collateral, and you're relying on a rehabber to perform for you, so that there's risk that's involved in this, and an investor needs to understand that. But for people that have experience or have gained experience, are going to classes and educating themselves, like we met each other at a note class, a 3-day, what I consider very intensive note training. And so, people leveraging their knowledge and their education and then going out and managing their money, that's really what this is all about, guys, is control and taking advantage of the tools that really the wealthy individuals have been using for a lot of years, but Main Street America really hasn't had much exposure to it. And that's something that we've had the opportunity to do here is, again, take what large family offices, high net worth institutions, high net worth trust companies that only cater to people that have 30 million or more in investable assets, and really create a system and a format and a community for people that are your everyday people that want to go out and flip a house or make a loan or invest in their local community, invest in a startup company. And so I've had clients that have invested in startup companies, everything from a coffee shop to an AI-based software startup to cryptocurrency funds and blockchain. And, the list goes on. And obviously along the way, a lot of real estate like we talk about.
Yeah. I tell you, it's amazing how people don't educate themselves in what is a benefit to them and that they are able to go do. And I think, you hit the nail on the head. They just don't educate themselves on what they're able to do with the monies that they have. And so let's talk a little bit about who is your typical client. We know that there are a lot of high worth people out there that have a lot of capital, and kind of the segue into introducing you of, it's really not about the money with them. It's really about what they're able to do, whether it be for their community or legacy. But let's talk about somebody that doesn't have a whole lot of capital. What's that direction? What's that look like for people like that?
Yeah, and that's okay. It really runs the gamut. Some people, I'm glad you asked the question, Dwayne, because some people, when they see equity trust and what we do,
They
they
think
think,
big
oh,
firm. Yeah, I can't fit into that group.
exactly. They think, oh, I got to have $500,000 in a retirement account or $1 million in a retirement account. And interestingly, we have a lot of clients that have 50, 75, $100,000 from a 401k that they've built up over the years, or an IRA or a Roth IRA or an HSA. And they want to go buy a house in Kentucky for $91,000 and rent it out for $850 a month, making about an 8% cash on cash return. That's not including appreciation and future rent increases. That's a real case study, in fact, Mark, that I have. And so we work with lots of mom and pop investors just like that are getting started on the ground floor with a smaller amount of money in their retirement plan. And interestingly, being that I've been doing this for close to 20 years now, you get to see the success because it doesn't happen overnight. It could take 10, 15, 20 years. But I just got a call from a guy that I met back in about 2011, 12. His name's Daryl. And he started with a smaller amount of money from a 401k that he rolled over. It was only about 60, 70,000. And he did some wholesale deals. He started investing in real estate, bought some houses subject to owner financing. And so long story short, he now has over $1 million in his Roth IRA that he has built up. That's all tax-free growth, and he can take that all out tax-free. And then he has his traditional IRA and some money in an HSA. And so, that's a real exceptional story, right? So I don't want to paint the picture that, everybody can do that, right? You gotta do the work, you gotta do the groundwork, you gotta work hard at it. This isn't put your money with a wealth manager or financial advisor and expect you to have the returns and expect to have the growth that you would have like that. But those are the types of things that we see. So it doesn't have to be a whole lot of money that folks start with, but you definitely got to have education, you got to have network, you got to have the willingness, you got to work hard at it. And that's something that I pontificate on a lot with people as I say, hey, if you expect someone to knock on your door and say, hey, guess what? I have an investment opportunity that yields a 40% return. Most likely that's a fraud.
Yeah, right.
Maybe, right? There could be some diamonds in the rough though, but that's like, you probably should question that. Not probably, you should question that. And it's probably not right. And obviously, if someone ever says, a guaranteed return, that's an absolute, you can't do that, right? And to stay away from that. But the point that I'm making here is, you got to go out and put work into this. But if you put the work into it, if you work as hard, like I say, if you work as hard with your retirement accounts as you do at your day job, right? You're going to see good things happen. Okay. Most likely you're going to see good things happen. But unfortunately, we're not trained to do that. From a young age, we're trained to do what? We're trained to work really, really hard at our jobs. And then our retirement accounts are kind of one of those.
Everything will be okay.
We just kind of look at it once in a while and hope everything's okay. Well, guess what? When the market is doing great, like right now, the S&P 500 is up over 17%. The Dow is up over 11. NASDAQ is over 23%. Every financial advisor in America looks like a hero. Well, what happens in a down market? What happens when there's massive drawdowns? What happens when there's geopolitical insanity that's going on? Everybody's portfolio.
That never happens. There's never any of that.
Exactly. Yeah, exactly. Exactly. And so, that's when all of these types of things start coming out of the woodwork. And then you get into portfolio diversification, real diversification, which is hard to value, hard alternative assets in a retirement portfolio. And we can't tell someone what is the right diversification mix, but we can certainly educate people on how they can hold real estate, how they can hold loans, how they can hold notes, how they can hold private equity opportunities and hedge funds and cryptocurrency in their self-directed retirement accounts to hopefully help that person bulletproof their portfolio from massive drawdowns that can occur from outside external conditions that we just can't control as investors.
Yeah.
they're self-directed for a reason. It's because you do have to self-direct your money. It's your money, it's your retirement. You need to educate yourself. And that networking with people like you and Duane, that's what makes all this work.
You know, when we met, I would say probably 15 years ago. Is that about right?
Yep.
It just, when we would have students in the class, and I was surprised of how many people transferred from one job to the other and left their money and really didn't know what they have. And you made a good point about, you go to work for a company, 30 years, 40 hours a week, whatever money you made in your 401k, it's left, it's forgotten about because people don't manage their money. They manage their day to day by systematically getting up, doing the same routine every single day, going to work and coming home, but they don't manage their money in a way of having it go work for you. I say money is a result, not a cause. You have to do something to get money, but yet take that money and have it go work for you, whether it be in real estate or being smart about it. And, in today's market, whether it's, cryptocurrency, like you said, or real estate investing or note buying, whatever that is. And I'm astounded by the people that just don't know. Yeah. So, you read the book, Playbook for Life. What's one thing that you feel that stood out to you that you could have used as a younger John years ago? Where do you think that would have helped you in way of programming yourself and also investing?
The one thing I'll say is there's directly or indirectly a lot of references to, I think leadership within the book. And, when I think about leadership, we oftentimes think about working for a company and being a leader in a company, or if you're in the political arena, a leader in that political arena, or if you're a nonprofit cause, right? And the way I look at it is from an investment perspective, life perspective, there's opportunities for leadership everywhere you go. And to answer the question directly, Duane, the one thing that I got into a little bit later on in my career that I wish I would have gotten into earlier, and just say earlier in life with relationships and friendships and things that go outside of business, go outside of making money, go outside of investing, is servant leadership. And one of the things that I got into quite a few years ago, but not early enough, and certainly the new book, had the new book been out earlier, that would have helped too. But hey, you're here now, right, Mark? So
Hey, yeah, right.
You got it now. You gave it to us now. So we appreciate that. But, Dale Carnegie, a lot of people know the Dale Carnegie books, right? And he's got this little book. It's the little golden book, right? And it's so simple stuff, but it's all servant leadership type things. And how do we serve other people? How do we ask questions genuinely? And from an investor perspective, the way I look at it is, now when I sit down with a seller of a property, I'm asking questions. I'm spending time getting to know that seller, their background, what do they do? And interestingly, I just bought a 16.5-acre property in a rural town in Ohio here. And we sat down to get coffee and sign a purchase contract. And it was supposed to be a 15-minute meeting. And after about 20 minutes, both of us canceled all of our other appointments for the rest of the day. And we ended up spending 2 hours together. And that's an investor that we will most likely have a long-term relationship. And so, that's important in business and doing deals and negotiation. And I think a lot of people don't think about that. Like, a lot of people think about negotiation and they see things online and how do I be a hard negotiator? And no, to me, that's not what it's about. It's about like what's in Mark's book, leadership and being a servant leader and asking questions genuinely and being thoughtful about other people and really believing it, right? Like if you force it just because you heard me talk about it or Mark talk about it, that's not going to come off genuine. You got to almost train yourself, because as human beings, we're selfish creatures, right? So we just want to get the deal done and get the best price for the deal we can, right? But like once you kind of take a step back and you reset yourself and you start training yourself in your mind, because you said that, Duane and Mark, and in the book, kind of retraining the mind to do these types of things, you really start to see your outcomes different and you feel better about yourself. And I think that just kind of is that full, circle keeps going around and around and around. Not every deal works out. And unfortunately, there are bad actors out there, right? So not every person I sit down with at the end of the conversation do I feel like, hey, we really were genuinely back and forth. And that's usually when I know that, hey, that's not somebody that I want to do business with. And, I appreciate you guys. We've all sat around the table together, broke bread together, and have had genuine conversations like this. And I think that's why in this podcast, it makes it so easy for us to converse.
Yeah. I watched a training video the other day because Mark and I are so big into self-development and constantly mind feeding with training and mastermind and all. And a guy was giving a sales training to his employees, and he said, the old, hey, sell me the pen. And he was talking to a lady that was in the group, and she goes, "Oh, it's so wonderful, and it writes so good and smooth." And he goes, "That's the problem. Everybody wants to talk about the pen, but they really forget, why do you need the pen? What color of the pen?" And really, like you were talking about, really creating that relationship. And I think it goes beside, goes by the wayside of people wanting to give all the benefits so fast, thinking that the more information I know and I can give somebody, they're going to want to work with me. And I think it's total opposite. I think it's relationship building. Find out what their pain point is, how you can help them, what's important to them, to where you can now focus in on how you really can help them versus why the pen's so great. And I think you made a great point there.
Yep. I forget who it was. It was probably one of the Carnegies that said, the way to get what you want in life is to help as many people as you can get what they want out of life. And
yeah, that's that there's a guy, you probably know him. I'm not going to mention his name. Great guy, been doing real estate in the Tampa Bay, Florida area for like 50 years. And that's what he preaches. He's been doing it for a long, long time. And that's what I did earlier on in my career, is I found people with gray hair that have a lot more experience than I do, or even sometimes people with no hair, right? Gray hair or no hair.
Hey, listen, that's the way to go.
And I have a lot of experience and spend time with them. How can I help you? But interestingly, a lot of those folks, they're at a point in their career like you, Mark. I know that, and Duane, you too, where you just want to pour into people and help people and mentor people and younger people. And like I was there as a younger guy and really, connected with a lot of the older guys and gals that and got so much from them. So that's kind of my advice for especially maybe the younger listeners is, look for those people that have gray hair and have been around a long time. The people driving flashy Ferraris in their TikTok videos and their Instagram videos, I tend to find those people don't last very long. Most of them end up in jail, or sometimes they end up in some kind of other compromising situation. Not all of them, but you do see that, right? And so,
Yeah,
that's my advice there.
we had a friend of mine on not long ago on podcast, and I've known Rob for a long time, and he's a local real estate investor, has 450 doors, I think, right, Mark? And so real successful guy. And we were talking about just being true to who you are, and all these people that you see on TikTok or YouTube all talk about how you can make no money, no money out of your pocket. You can make $5,000 a month and all. And I said, listen, I'm going to shake up the industry a little bit, and I call BS on all that, because John, you and I know, Mark definitely knows that there are a lot of people out there that are pushing a product to where they've never done it before, but they're a hell of a salesperson to convince people how they can go do it, but yet you got to go buy this. And so I think I just am a true believer of being passionate at what you do. And I think genuine people can really read through that and see that, hey, this person can help. And it's not all about the yell and sell and making promises that they can't keep. So I agree with you.
Yeah. Hey, I do have a question. What do you see as a trend in investing and savings and tax that you think our listeners should know about? Is there anything new and
Yeah, there is. Technology has done some interesting things for self-directed investing to make it easier for individuals to be able to invest in real estate, private equity opportunities, investments in startups. And we've been fortunate enough here at Equity Trust to be able to invest in technology to make it a frictionless process for individuals to use their retirement accounts to invest. And one particular account out of the 4 tax advantaged accounts that I mentioned, the solo 401k plan, for self-employed individuals, solopreneurs, your real estate agents, your freelancers, independent contractors. It's a really great way for them to put a lot of money away into a retirement account, and it has very unique tax advantages. So with a solo 401k plan, in tax year 2025, for example, you can contribute up to $70,000 to the solo 401k plan in one individual year. And if you're 50 and over, up to 77,500. And you can either make a pre-tax contribution and get a deduction and have your wealth grow tax deferred, and then you pay taxes when you take it out, or all of that money can go in after tax. So you don't get a deduction now, but you have tax-free growth and tax-free distributions. And years ago, it was really complicated and clunky for someone to manage a solo 401k plan because it's an employer-based plan and there's a lot of nuances and legal and compliance components to it. But fortunately, with technology advancements, we now have the capability, the platform, and a turnkey solution that makes it super easy for a solopreneur without any brain damage to be able to set up a solo 401k plan, put a lot of money away, and then be able to self-direct that solo 401k plan into property investments, real estate syndications we see a lot of, cryptocurrency. But then also if they want exposure to stocks, bonds, and mutual funds, they have the ability to do that. So that would be number one, I would say, Mark. The second item, I would say, everybody's talking about AI right now, right?
right?
And where is AI sort of fitting into the broader financial scope and picture? Well, interestingly, I would say in financial services, AI is not going to be adopted as quickly as maybe other industries, mainly because in financial services, highly, highly regulated, highly nuanced, just like the medical field, right? So you're going to see challenges with AI being introduced into the medical field because of the regulation associated with that. So maybe a little bit behind, but all that being said, there is some emerging technology advancements that are happening around just the ease of the everyday investor modeling out what would their portfolio look like in 30 years if they introduce alternatives, if they don't have alternatives, if they're investing only in large cap stocks. Some of this has actually been around a long time because the reality is machine learning and some of this tech has been around already, but AI is kind of supercharging it. It's putting the gas on the fire, so to speak. And so that's one thing that I would let investors know is, look out for how AI is being introduced into financial technology and try to stay ahead of the curve on that to your best ability.
Things are going fast, aren't they? I mean, technology is amazing. Scary, terrifying, but amazing.
Terrifying is a good word to use, Mark. I am with you. I wake up every day and I kind of look around like,
Terminator here yet?
Yeah, yes, correct. Robotics and everything else. It's a lot of fun though, too. I'll say, it's interesting to see, the great things that are happening, but, just like anything else that moves this fast, right? There's going to be a lot of good things. There's going to be a lot of real bad things. and there's going to be some neutral things. And I'm just trying to wake up every day and stay in the good part of it.
Yep, absolutely.
You there?
We're all here.
Okay, it froze up there for a minute. I'm
Yeah,
sorry.
there was a big solar flare last night, and it is affecting communications a little bit. So
Yeah, I've had a couple freeze up, so didn't know if I was still live or not. So, John, what should people know today? That's really, I know Mark was talking about what's changed and all, but what do people really need to know? Number one, that's they should be asking their employer. So people that possibly have an IRA that they can invest in at work, or 401k, are people able to elect what they want? I know at one point I thought years ago, and correct me if I'm wrong, that there was a certain day of the year that you were able to go to your employer, and if they had a 401k, you were able to change that to an IRA. Is that correct or incorrect?
So what you're referring to is with a 401k or 403b or 457 or TSP, depending on your occupation and institution you work for. Those are what we call employer plans. And when you put money in there and then your employer sometimes matches you, while you're still working for that company, generally you can't roll the money out into an
Okay.
IRA. And usually your options are pretty limited. You can only invest in a menu of mutual funds. You can't self-direct into
That's
real
right.
estate. And what you're referring to, Duane, which is a good point, is, and it's not a certain time of the year, it could potentially be any time of the year, but there are occasions where you can do what's called an in-service withdrawal, which means while you're still working
Oh,
for that employer, you can take some money out and roll it over. If you're 59 and a half or older, which is the qualified retirement age, in some cases you can take all of it and roll it over into an IRA. The good news is once you leave that employer, you can then unlock all of that money. So you can roll all that money over into what we call a self-directed IRA or potentially a self-directed solo 401k plan if one qualifies. And then you can start investing in properties, crypto, even still stocks, bonds, and mutual funds. But that's a good point. And to answer your question, Duane, on what to ask your employer, I don't know that it's so much about what you're asking your employer, but more about what your capabilities are to contribute to a 401k in the workplace. I wouldn't say it's a bad idea. There's some people out there that say, "Oh, don't put any money in your 401k at work because you can only invest in traditional market investments." Well, that might be okay because maybe your strategy is just to build for the next 2 to 3 years, right? Maybe your strategy is just get 3 years of really nice, healthy contributions, and then your goal is to leave that employer in 3 years, and then you can roll the money over. Because the great thing about a 401k is right now, if you're under the age of 50, you can contribute 23,500. If you're 50 and over, it's 31,000. So imagine that. Let's say someone that's 50 or over 3 years, they're getting over $90,000, or I'm sorry, over 60,000, but with an employer match, they're probably getting closer to $90,000 in that 401k. Well, that's a healthy
mm,
balance for them to then roll over and be able to participate in a real estate transaction or a loan investment or whatever it is that they're
absolutely.
trying to do. And so those are the things that folks can think about. And then as far as on the self-directed side, if someone is working, but then they have a side business, which we see all the time, people are doing, freelance or independent contractor work. And so they can then have an IRA and a solo 401k plan. And so they just look at all their different accounts, their different buckets, as I call them, and they try to fill those buckets up as much as they can every single year. And then that way they have more money to be able to go out and do the types of deals that they want to do and take advantage of the compounding interest in the absence of taxation that we talked about.
That's awesome. That's
Yep.
awesome.
And because of all those little things that John just talked about is why you need somebody like John on your team to help you navigate all of the rules and regulations and nuances in investing this way.
I was fortunate enough for years and years, to listen to John, stand in front of a room and talk about this, for an hour, for 90 minutes. And, I always learned something from John. I always felt like, that he is the guy that I go to in any type of investments that you need to be up to date with. What's the direction that I need to go? This is what I'm trying to do. And I would bend his ear all the time at these events because he had so much knowledge. He was so, you could tell he has passion. He's plugged in and, working for a equity trust, a strong company that's been around a long time. Mr. Desage, I mean, great founder, very smart as well. And, you work for a solid company, John. You've always been, very professional, and the information is to the moon. And so I appreciate you taking time to come on our podcast. I know our listeners will appreciate it. If somebody would like to get in contact with you, what's that look like? And, how can they reach out?
Yeah, so really easy. Just go to our website, trustetc.com. So that's a great place to go. You can find all my information there to contact. And then we have a YouTube page. So you can go to YouTube and check out a lot of video content for folks that are more inclined to listen to videos. I also have a book that I just released. And so that's called Wealth Beyond Wall Street. It's sort of a field guide to self-directed IRAs. I will say it is much, much more dry than your book, Mark. So if someone was asking which one should I read first, I would say check out Mark's book, and then self-directed IRAs, check that out next. But Wealth Beyond Wall Street is the name of that one. So that was a lot of fun writing that book. And it's very much a textbook, I would say, for people that really want to roll up their sleeves and figure out how to do this business and self-directed investing. And so those are some resources for people. But yeah, Duane and Mark, I really appreciate you having me on. I really enjoy these conversations and questions and helping people, as I know you guys are the same way in helping people. So anytime I can help you guys, just let me know.
Yeah.
Perfect.
Sounds great.
Mark, you have anything else?
Yeah, we'll put all those links down in the comments so that everybody can find them, find your website easy, and find your book. And I'm sure it's something that everybody should definitely read.
Hey, listen, we appreciate you, the listener, always tuning into our episodes. If you would like, share, leave a comment. We love the comments that you're leaving. Also, Playbook for Life, as John mentioned, you can download it on huddleforsuccess.com for free. And also, good news for us, our book, Playbook for Life, had just come out this week on Amazon, so you can go on Amazon and purchase it. You can go to Playbook for Life, Mark Bruce, or Playbook for Life, Duane Gibbs, and it'll come up. You can purchase it for $9.99. And listen, John, we appreciate you for being on. We appreciate you, the listener, and also check out our Huddle Up, as we have it every Wednesday and Friday. And so with that being said, stay huddled up.
Thank you.
Thank you for tuning in to this week's episode of Huddle for Success. If you found it helpful and want to support others on their journey, share this podcast, leave us a rating, and drop your thoughts in the comments. We'll see you next week on Huddle for Success. Stay huddled up.